Only a handful of countries worldwide are tax havens, and hopefully, your business is located in one of them. In most countries, a significant amount of dough goes to the government in the form of taxes, and there are plenty, whether business persons or individuals. There are nations that are imposing a staggering 60% personal income tax and 37.5% corporate tax, in addition to several other taxes including sales tax, income tax, property tax, inheritance and estate tax, excise tax, and more. 2022 dawned on the UAE with so many surprises, some pleasant, some not. Forget about pleasant ones. Let's talk about the one that is bothering you, and that is none other than the imposition of the federal-level corporate tax all across the UAE. With distinct exemptions and conditions, the corporate tax will apply to the income obtained by legal entities including individuals engaged in business, commercial, professional, or any other economic activities for which a business license or a permit is required. Before we get into the nitty-gritty, there is good news and there's bad news regarding this new update. Bad news first, as a business, you can't evade taxes. They are as certain as the World Cup every 4 years. The good news, tax deduction is possible with effective tax planning. Just find a qualified corporate tax consultant in Dubai and bingo. They will not only help you prepare for the 2023 UAE corporate tax, but also make sure your transition into the next financial year is truly free from any glitches. So, with that out of the way, let's get into it. On the last day of the first month of 2022, the UAE government declared that after June 1, 2023, that all businesses and entities registered in the UAE will be required to pay federal-level corporate tax at the rate of 9% on meeting certain criteria. The eligibility measures have been set, keeping the UAE companies operating on a small or medium scale on a pedestal. Frankly speaking, the law and regulations in this regard are yet to be published in detail. In the meantime, you should know that you are subject to paying corporate income tax if you are 1. A business earning taxable income of more than 375,000 dirham, which is $102,000 US, provided you don't come under free zone jurisdiction and take tax holiday benefits. 2. An individual making net profits above 375,000 dirham from activities that require a commercial license. The federal corporate tax is applicable on profits and has nothing to do with the various costs associated with the business, such as the cost of licenses or permits, visas, health insurance, and other operating costs. Businesses in the UAE will now have to cough up corporate tax on their net taxable income at the applied rates of 0 to 9%. The announced UAE corporate income tax regime would introduce a tier system with 3 rates. 1. All annual taxable profits that fall under 375,000 dirham would be subject to the 0 rate. 2. All annual taxable profits above 375,000 dirham would be subject to a 9% rate. 3. All multinational enterprises that fall under the scope of Pillar 2 of the Organization for Economic Cooperation and Development Base Erosion and Profit Shifting 2.0 framework, that is consolidated global revenues in excess of 3.15 billion dirham, would be subject to different rates as per the Organization for Economic Cooperation and Development Base Erosion and Profit Shifting rules. This move of the UAE government is a dead giveaway that the era when most businesses in the UAE do not pay tax on their business income is ending forever like Phase 3 of Marvel movies. But the best part is the UAE will still remain a haven for tax exiles and will continue to lure foreign investors worldwide because the maximum 9% corporate tax is still considerably low by global standards. Denmark, for example, has an income tax of 55%. That means they take more than you earn. Meanwhile, prior to the new tax laws, most companies in the UAE, whether free zone based or mainland ones, don't have to pay corporate taxes on their income, and to top it off, free zone corporations are eligible to operate with a renewable, -50-year moratorium or suspension on corporate taxes. Now that's about to change a little. Beginning June 1, 2023, all the UAE registered entities in the UAE will have to pay corporate income taxes subject to exemptions. The UAE corporate tax rate may range from 0% to 9% depending on the company's profit generation capacity. This means the corporate taxes rate will be 0% for small businesses whose taxable income is below 375,000 dirham, which is $102,000 US. Corporate taxes are mostly calculated based on accounting net income. To arrive at the net income, which is also called net profit or net earnings, one has to consider all the income from all the revenue streams. They also are required to compute their expenses incurred to earn such incomes, which include operating expenses, interest on loans, depreciation, and amortization expenses, among others. To calculate your corporate tax liability, you have to multiply the net or taxable income by the 9%. And to find out the taxable income from your business, you have to deduct the sum of all expenses from the sum of total income. It's a mouthful, we know, so meet a professional to help. While thankfully, salaried people in the UAE will remain out of scope, individuals making more than AED 375,000 from freelancing and other home-based activities that by law requires a license or permit are not exempted from the tax. Exemptions from these tax laws are: 1. Any income from real estate investments, as long as such investments are made in a personal capacity and not as a business that needs a commercial license. 2. Any income from any business or commercial activity for which the UAE law doesn't demand a license or permit by law. 3. Any income, capital gains, and dividends from personal investments in shares and securities. 4. Any income and interest earned from savings and deposit accounts. 5. Income from employment. So, we are assuming running a successful YouTube channel like this one might not fall under UAE tax law. But hey, ask first before concluding. The Federal Tax Authority also announced that dividends and capital gains earned by UAE businesses from their qualifying shareholdings will be exempt from corporate tax. In this case, qualifying shareholding refers to an ownership interest in a UAE or foreign company that meets certain requirements, which will further be specified in the upcoming UAE corporate tax law. Likewise, qualifying intragroup transactions and reorganizations may not be subject to corporate tax. In 2018, the UAE introduced value-added tax on most goods and services at a standard rate of 5%. The UAE imposes a 20% tax on branches of foreign banks operating in the country, and on companies with concession agreements in the oil and gas sector of up to 55% at the emirate level, and now we have this new one added to it. At the moment, it is unclear if the new corporate tax scheme significantly affects free zone companies. Though based on early reports, the new corporate tax regime will continue to honor free zone incentives, recognizing the contribution the economically free zones make to the UAE economy. You see, the Emirates of Abu Dhabi and Dubai contain many free zones, where international groups have been allowed to establish 100% owned subsidiaries without the need for a local shareholder. Most free zones provide tax incentives such as 100% foreign ownership, 100% repatriation of capital and profits, and import and export tax exemptions to companies and branches established therein, which are typically valid for a number of years. According to the managed object format of the Common Information Model, free zone businesses will be subject to the new corporate income tax. However, the new proposed CIT regime will continue to honor the tax incentives offered to free zone businesses that comply with all regulatory requirements and that do not conduct business with mainland UAE, that is with parties outside of the free zone. Honestly, we don't think the new tax law is that bad. The UAE corporate tax regime will even have benevolent loss utilization rules and will permit UAE groups to be taxed as a single entity or to apply for group relief in respect of losses and intragroup transactions and restructurings. The regime will also ensure compliance burden is kept to a minimum for businesses that prepare and maintain adequate financial statements. Furthermore, businesses must file one corporate tax return only each financial year and don't need to make advance tax payments or prepare provisional tax returns. Although most of the details of the new corporate tax regime are yet to be released, the Federal Tax Authority has provided some information on the functioning of the new corporate tax regime in the UAE, which will briefly be reviewed in the following. The new UAE corporate tax will become effective for financial years starting on or after June 1, 2023, meaning that a business that has a calendar year or financial year starting on January 1, 2023, and ending on December 31, 2023, will become subject to corporate tax from January 1, 2024. When the news made waves after its initial announcement, many in the UAE's business scene say the development shouldn't come as a shock. I don't think this announcement should come as a surprise. Corporation tax in the UAE has been in discussion for several years. And there is already corporation tax in the GCC, in Saudi and Qatar for instance, Chris Payne, chief economist at Dubai-based Peninsula Real Estate, told CNBC. As the UAE, like many of its oil-rich regional counterparts, pushes to diversify its economy away from hydrocarbon revenue, it's important that the federal government establishes sources of income that are not reliant on corporate dividends and investment income, both of which can be volatile, Payne added. That being said, the announcement gives companies in the UAE roughly a year and a half to prepare for taxes, but reactions are mixed on whether the move will allow the Gulf Sheikhdom to retain its attractiveness to businesses. Many UAE companies and branches have for years enjoyed a 0% tax treatment for profits generated in the UAE, both in the free zones and on mainland UAE. The current announcements are set to change this significantly. While the relevant legislation has not yet been published, international groups with businesses in the UAE are advised to consider the potential impact of these changes. That is all we have for you today. We hope you enjoyed this informative video. Don't forget to hit the like button and subscribe to our channel for more great videos like this one. Thanks so much for watching. See you next time.